right now. We are live. This is the first iteration of Education with Oakley. So let's see, let's hop over here. They cannot see chat on the video, but I will pull chat over when questions come up. I guess I could. Let's do this. Maybe I can try to do one thing here really quick. I could probably do window capture. Select a window. No. I was going to try to capture Discord as well as okay, well, it doesn't like that. I'll figure that out later. We'll have to build a scene for it. Okay, let's see here. All right. How do you find your daily level and the 4-hour level liquidity sweeps? Perfect question. So, as far as daily levels go, and I don't have the replay feature because I don't pay for TradingView, so it's going to tell me to kick rocks, right? So we'll just have to deal with that. The way that I find my daily levels there, Smitty, is I grab a horizontal ray and I will do my best to try to find some type of pattern. Obviously, pre-market opened right here, right? So it went up, tested that level, and kind of trickled down throughout the day. This was a news candle, but you can see right in here, grab this, you can see right in here, it retested it here, and then this morning retested it there. So we knew for some reason, given the pre-market gap up, that this was a significant level. So I'll always just mark that out. And then the same with pre-market low. This is on the 3-minute. You can do it on, the 5, the 15, or the 4-hour. It's going to be slightly different. If you want to do the 4-hour, I try to find like bigger overall trends. Let me turn this off here. Sorry. So like if I'm charting on the 4-hour, I'll do something more like this. Like that's downside there, and then you can see we have like quite a bit of consolidation here. So you can see that there's a good amount of resistance there. So that's kind of how I would do a 4-hour time frame. Sorry if you heard that. Yeah, that would be the 4-hour time frame. Otherwise, the 3 to the 5-minute for your intraday levels. That's how I would mark those out. And then the same thing goes for like liquidity sweeps. That's just like a specific pattern. I don't know if we have one. Yeah, see, we didn't have one on the 4-hour, so there's no way of really knowing without a better example. But as far as the liquidity sweep goes, I'd have to scroll back and find one. I didn't prepare an example, so I apologize. Maybe something right here. Yeah, looks like right here is a pretty good example for your liquidity sweep. So you have quite a bit of support, right? It bounces, and it also bounced here, right? But what they did is they swept underneath that level, grabbed all that money for people that were thinking we were gonna go short at this position. They gobbled up all that money, pushed us higher, and then they just did it again here. So the same thing, wicked underneath that level, the wick got bought up, and then it looks like we continued to climb throughout the day. So that right there is a textbook liquidity sweep. You find a significant level, whether it's support or resistance, it works in both directions. And then you kind of go from there. Let's see. Okay, I'm going to move on to the next one. What's considered an A+ setup for you, and how would you know when to enter and exit a position? So an A+ setup for me, Robert, is what we're going to go over here in just a few minutes, but I can kind of go over it for you. And it's truly what my indicator is here. You know, like an A plus setup for me is when we flip the EMA from one color to the next, and then the subsequent candle comes back up and retests that EMA. That's a textbook entry for me. That is as A plus as you're going to see me with a trade. That's my strategy. It's been my style. If you've been here a long time, you've seen me, you know, you've seen me trade this way a very long time. So that's an A plus setup. When your EMA cloud goes from green to red, and after the flip, the second candle comes back up inside the cloud. That's your entry for a short position. When it's green to red, it's the opposite when it's red to green, which can be seen right here. So it flips from red to green. All right, the indicator came in a little early. I would have entered more like right here. So flips from red to green, and then it comes back down, retests that EMA. That would have been my entry. So it's hard to quantify that data with an indicator, but it gets you pretty close. All right. Did anyone ever find out what the catalyst for that move? I didn't see anything today, Steven. Nothing at all. Government balance sheet was probably the drop. That's what Eddie says. It's a good chance. Shadow says you can find them on the 15-minute easier, at least for him. I assume he's talking about liquidity sweeps. Okay, Steven says, this is just for some teaching purposes, because I know you guys can't see the chat right now. He says, liquidity sweeps occur when price reaches a swing high or a swing low and immediately reverses the other way in a violent way. The idea is that people set their stop losses and stop buys at that level, and they think that they're safe. Their orders are automatically triggered all at once, which causes a huge move. Market makers move the market through liquidity sweeps. They need people to buy and sell so that they can buy and sell. They do that as a manipulation, or they do that by manipulating the price action to reach those levels. If you're an HR, Lips post GEX levels, which can give you an idea of where MMs want, or market makers want the price to move. So there you go. That's a great example. So with that being said, any other questions? I don't know if we will have too many more. Let's see. Ooh, I gotta hide these names. See how many people we have in here. 27. How is your program different than a MACD other than that MACD is not on the same tracing screen? Showing it. Let's look. Let's add MACD. Okay. So I guess it's going to be a little difficult unless let's delete that VWAP and see if I can get color MACD inputs. Let's do the fast length of 5, and we'll do this at 13. Oscillating type is EMA. See if we can get those to line up. See, it doesn't quite look the same. Your crossover points are really early as far as... So, alright, so to answer your question, Ollie, yeah, okay, there you go. You said that's perfect. You can see the difference. Yeah, see, and I'm not saying that you couldn't set MACD up, and I could have this backwards. It could be 13 and 5. Okay. Yeah, see, I'm just not familiar enough with how to set up MACD. It looks as if you could, you probably could set it up to work the right way. I don't know enough about it. Yeah, Jedi does use MACD a lot, so. Okay, Steven says, what indicators do you personally trade on? Only my own, Steven. It's the only one I use anymore. Sometimes I will, like you can see here's my favorites, right? I probably haven't used this one in like 2 years. Moving average, this is MACD. Yeah, I just had this one on. VWAP is a good one if you like VWAP and you kind of understand how VWAP works. VWAP is okay. I used to trade with VWAP a lot when I was first getting started. Volume profile is kind of cool. I haven't really got it to work in a long time, but it's kind of neat. But yeah, for the most part, I use support and resistance, and my indicator for lost my train of thought. My indicator for momentum, trying to figure out which way the momentum is going. No, I don't use a VWAP setup at all. Truck washer. No VWAP for me on for my indicator. Yep, just EMAs. That's all it is. And that's why I felt kind of bad when I told Champ I would do this class and kind of how to use my indicator and the process, because like it's so simple. Like I'll probably start at like 3:50 or like 3:55 Eastern, and then I'll probably be done by 4 o'clock. Like I do my best to make it as simple as possible. You know, you just like here's your rules, here's how you do it. You don't break your rules, and that's that. That's the end of it. Like it's very straightforward. All right, Shadow is giving us a MACD setup here. He says fast length of 5, slow length of 35, smoothing of 3. Yeah, I don't know how helpful that is. It does look as if maybe like again, I don't know enough about MACD, but it does kind of look like the flips are in the relatively the same places there. So that's kind of cool. But I don't know. All tuckered out, you cannot use it on Top Step because Top Step is not Pine editor friendly. But if you do want to use it, we'll explain it here in about 10 minutes. I'll go over. So I'm gonna make sure to favorite that one tuckered out, because we're basically gonna go over how the indicator works, and then like you can use that information that I'm gonna give you and put it onto Top Step or TOS, Thinkorswim, and it'll be the exact same. So you won't get these little buy calls or buy put signals, but as far as everything else, it's very straightforward. Yeah, see, Clarkin said you can add the EMA crossover on Top Step and use the same settings. It just won't give you the call outs. Yep. Yeah, Big Papa, I am 100% recording this. We've been live for 13 minutes. You can't see chat in the recording because I downloaded OBS like 14 minutes ago. We've been live for 13 minutes. And so with that, I haven't had a chance to like truly set it up. I was going to do like picture in picture and have like chat on the bottom, but I just haven't had a chance to figure it out just yet, so I do have to apologize. So anyway, okay, it looks like Steven might have another question. Anybody else? CK White, I see you in here every day. I'm happy to see you here. I wish you had some questions. I don't ever see you typing, but it's good to see all of you guys in here. Morning, Benny. Afternoon. Can I see what you saw on the red trade today? Absolutely. All right, so it's going to be a little difficult because I can because I can see what happens next. But yeah, absolutely. So horizontal line right here, right? So with that, that's the 3 minute. Where's the 5 minute? Okay, this is where it got me, Myra. So this morning I charted out pre-market high, which was right here. Okay, the yellow is pre-market, and then obviously I charted PM low, but that doesn't matter. We'll ignore PM low. So we're just looking at PM high, and we'll ignore my indicator completely, right? So what I saw this morning is relative strength. We pushed above PM high and rejected, but it set a higher high. So whereas this was our original high, it did push higher before rejecting. So it was showing strength even above this. It did reject down underneath, of course, but it was showing some strength up above. And then when you flip over to the indicator, our EMA was green all morning, and that's on the 5 minute. It gets even more drastic on the 15. So we had our 5 minute high, and this was our candle pattern to start the day. Green, green, red, green. But like we talked about the other day, this red candle was engulfing, so it should have been short, but when it opened, or we should have went short right here, right? Because this candle engulfed this candle, right? So we should have went short here, but then the subsequent candle engulfed again, right? So it went from bottom to top, and it was actually a sorry, the wife was calling. So it was a stronger candle to the upside, and then we had, let me turn that off. Then we had this giant green EMA. So it's a super thick, super thick EMA cloud that shows quite a bit of strength, right? And so we bounced off the EMA cloud, and it looked like we were going to bounce again, and then we lost it. And we lost it underneath that 5 minute opening 5 minute opening level. So Myra, all it was is we entered on the EMA cloud bounce. Contracts didn't move a whole lot for us, and then we just couldn't get over 220.10 was the only thing. So yeah, that was it. It would have saved us if we looked at the 3 minute high. We just weren't looking at everything this morning. 3 minute high would have put us there. We never closed over it, right? So if we were on the 3 minute high, we would have never entered this trade, even though our EMA was green, and then we could have rode puts down or anything. So, but yeah, I'm not sure I would even call it a mistake because we were basing our levels off of the 5 minute. So it is what it is. Benny, it's gonna be hit or miss either direction, but it's 3 minutes gonna be good for like scalping, could be really good for entries, but then like let's go to like the 1 minute and look at this morning. This is awful. I mean, look at my indicator this morning just losing its mind. Buy calls, buy calls, buy calls, buy calls, buy puts. You see what I mean? So like you can do it on any time frame. You're just gonna get different outputs over and over again. So I mean, even look at this is on the 3 minute this morning. It was buy calls that open, buy calls that on the third candle, buy puts, buy calls, buy puts. So normally I prefer the 5, right? I think it's a better indicator of how the how the indicator is supposed to work. So I think the 5 is better, but I have seen a lot of success on the 3 as well. And obviously, I mean, recency bias, the 3 would have saved us this morning. Okay. Let's see. Steven says, no question, just wanted to say I've learned the most from you. You talk through your setups before entering trades, which I appreciate. Hey, thank you, Steven. Honestly, I talk through them a lot because I kind of need to remind myself like what I'm doing. I have to kind of reason with myself as to why we're entering a trade, because trading is difficult. We've all talked about this before. So it's like when you sit there and you're like, okay, well this lines up and this lines up and this looks good and Gex is good and Flow is good and we don't have any news coming up. Like you see what I mean? Like you go through things like that. And then the cool thing is like the community. Like I didn't know we had news this morning. I didn't know we had news tomorrow. I don't really look at the news. I don't really care because I'm an intraday trader. But that would have saved me even more. Just time wait. Looking things up. And this morning somebody was like, "Hey, we had news at 7." It was just kind of cool. So when you're in a community, people can remind you of things that you may have forgotten about or anything of that nature. So but yeah, thank you for being here. Clarkson says, "Oh yeah, Myra, I was hesitant to close out because of the 15-minute EMA. When you go back and look, the 15 EMA was super, super, super strong. Like it was super thick, and we had bounced from it right here and right here, and then it looked like we were going to bounce here again. You see the wick, so it looked like we were going to bounce, but then the next candle, of course, is what killed the trade. So, but yeah, that's why I held on longer than usual today, is just because it looked so strong. And I mean, you can go back to any of the stocks this morning; they all kind of look the same. SPY was a little weaker, but Q's broke over its. What is this? Oh, that's 15-minute. Yeah, Q's broke over its 5-minute opening range. Same on the 3, but it yeah, that's all. We held on a little longer just because the 15-minute looks so strong. Clarkson says, "Is there a reason you trade on the 3 the most?" I trade on the 5 the most, but the 3 has been really good as far as entry points for me. So it's just been something I've been kind of using. But you can see my favorites up here: the 3, the 5, the 15, the 4, and then the daily. I don't really use the daily. If I do, it's because I'm zooming like way far out. I don't use my indicator on the daily. It's kind of just to see the overall trend. You can draw a trend line like just like something like this on the daily. You're bouncing here, you're coming down, you're bouncing, and now we've broke, and that's the only reason I would use the daily chart. But anyway. OC3, that's perfect. We're gonna get into that. Let me OC3. Let me heart that one because we're gonna get into that one really quick. Benny, the reason we get into IWM trades, especially today, is because I had relative strength this morning over all of the other indices. So look at this here, Benny, from 9:05 through 9:55. So for basically an entire hour, right here, right, an entire hour. Okay, so for like an entire hour, we were up above our 5-minute opening high. If you look at SPY from the same time, from 9:05 to 9:55, so like right here, look how weak that is in comparison to IWM. Up above its 5-minute high, way down below its 5-minute high. So it looked like IWM was going to have relative strength in the market over SPY and Qs that were both down pretty bad this morning in that same time frame. So that's why we got into IWM. Oh, someone said you can't see my stream anymore. Rip. Can you? Can someone confirm or deny? No, really? I don't know when that happened. Thank you. It's recorded, so you'll be good there. Thank you guys for letting me know. Sorry, I'm just getting caught up. Okay. Oh, truck washer. Sorry. Okay. No stream. Sunflower mute. Yeah, I think the volatility, Steven, honestly, tomorrow is going to be, it's either going to be, Steven, one of those days where me and you scalp like 14 different trades for like $10 each, like over and over and over again, or it's going to be like, don't touch the market because it's lost its mind. So anyway, all right, we have 3 minutes. I have a doctor's appointment to be at at 3:30. So I'm going to go ahead and start 3 minutes early so we can go ahead and get going with this. I want you guys, if you have questions, to tag me in chat. You have to do like at Oakley, or you can DM me. I'll always answer your DMs and everything, but I won't have time to answer questions right after the class. Right? That work? Everybody got it? Thumbs up ones in chat if that makes sense. Good to go. One, cool. All right. Okay. All right, so this is going to be super simple, and I've told you guys that before. This is going to be really fast, really simple, and we're going to make it as easy as possible when it comes to using my indicator. We're going to do it on the 5 minute today because I feel as if the 5 minute is a little easier to understand than the 3 because it does flip rather quickly. And we're just going to use this little section of QQQ from today to go ahead and talk about how to use this indicator. So, the indicator itself is not the end-all be-all of indicators. It is wrong sometimes. I have to preface that. It is just a tool that you can use to assist you in trading. You still need a proper trading strategy. Your trading strategy cannot only be follow this indicator. It's not going to work, right? You have to have other reasons to enter a trade, and you have to have your own confluences that work for you. But the indicator itself is a very, very, very good tool for tracking the momentum of a stock. So what is this indicator? So it is more or less, it is just an EMA momentum tracker, plain and simple. It uses the 5-day EMA and the 13-day EMA, and I can show you here. The 5-day is going to be your yellow. The 13-day is going to be your white. And that's it. There's only two EMAs on this, right? It's just 5 and the 13. It's what I've used forever. So in this case, our EMA cloud is red, which means our momentum is to the downside, right? You can change it to whatever you want, but for right now, the red EMA cloud means momentum is to the downside. As soon as that cloud changes color, so maybe we've consolidated for a little while and the EMA cloud has gone from kind of wide to more narrow, and then we get a couple candles up above it, that shows a shift in momentum, right? So we can kind of see, well, all right, well, we've consolidated for a little while and now we're up above, so we're not really in a downtrend anymore. We're kind of starting potentially a new uptrend. That's the idea of the cloud and the colors, and all it does is track that for you and kind of shows it visually, makes it a little bit easier for everyone to understand. So if you followed me prior to creating the indicator, you know that there are 4 steps. There are 4 steps in this process. That's why it's called Oakley's 4-step process, and that's how it's always worked, right? So step 1 has always been the EMA cloud flips from red to green, or vice versa, but in this case we're just going to do one example. So the EMA cloud flips from red to green, okay? That is step 1. That is when you start looking at the stock and you're thinking, okay, are we seeing a shift in momentum? Are we going to move up from here? Step 2 is I want a candle to close over the EMA cloud, right? So I don't count these little flips right here, like that little green piece that you see right there, that does not count. It's when the 5 actually crosses the 13. That is our first indicator. So you cannot count this one that's on the line. You have to count this one. So this green candle on the 5, this green candle has to close over the EMA cloud for step 2 to be checked off our box. Step 3 and step 4 happen at the exact same time. Okay, it is still 4 steps, but they happen at the exact same time. Step 3 is that the price of the stock comes back down into the EMA cloud, and at that point you can either do it when it crosses over the 5 EMA, our yellow line. You can either do it when it crosses over the 5, you can do it kind of in the middle. As long as that wick does not go down and hit the 13, then you are good to enter the trade at that point, which is step 4. So step 1 is flip from red to green. Step 2 is, I guess another good example is on step 2, it does not have to be this next candle. It does not have to be that candle. It can be 4 or 5 candles down the line. You know, if it's kind of flirting around, flipping in and out, you know, and I wish I had an example of that. I'll look for an example, but anyway, yeah, okay. So it does not have to be this next candle, right? So in this case, it was, right? This candle closed above, and then it was one candle. Then the second candle is what closed under. Even if this one would have just stayed right here without this wick, this green one would have been where you entered, right? So that's kind of the idea. So 4 steps. Flip from red to green, candle close over the EMA cloud. 3 is price falls back into that cloud. And then 4 is that's when you buy calls at that moment. So one thing, because I just saw it right over here, is that sometimes you will see things like this, right? Let me zoom in a little bit here, but not give it away. Okay, well, I'm going to give it away anyway. So this right here, okay, when it flips from green to red, okay, so this is where it flipped right in between here, okay, so you cannot count this candle. This candle right here would have been, this would have been step number 2, okay? This would have been step number 2 because this one closed underneath the EMA cloud, right? This candle never made it back into the EMA cloud. So in this case, we never checked off step 3, which means we don't go on to step 4, right? But as it fell, it found some support down here. So my indicator, because you can't quantify this data, my indicator is still going to tell you to buy puts right here, even though I don't agree with that, right? Because I can only do so much with an algorithm. If it has already fallen and it's come back up like this, I would wait. I would not enter at this time on something like this, right? So I would just wait on, unless it's relatively close and it looks like you're catching the momentum, you know, like you're riding the wave and you're not catching it at the bottom, then I think you're fine. I think that's the best way to use it. And I'll try to find another example that's not on one of these stocks today. Here's it. So here is another good example. Same thing. Flipped from red to green right here. Closed over. Didn't touch. Did come back to the EMA cloud. Then it climbed out of the hole. So if you're specifically only looking at the indicator and you don't understand, you don't want to follow the 4-step process, you just want to use the indicator for what it is, your best bet is to not enter right when it says buy calls, right? Because if you've used it before, let me see if I can catch one here at the end of the day. No, I'm not going to get one. If you've used it before, you know sometimes it'll flash up and it'll say buy calls on your screen, and then like 2 minutes later it goes away, right? And that's because EMAs are, they're not static, right? They move throughout the day depending on momentum and the size of your candles. The larger your candles, the wider your EMA is going to be, right? So sometimes, like it could have happened here easily, right? So like small candle, small candle, small candle. Say this one said buy calls, but then it dipped back down to like right here. That buy call signal would just disappear, right? So your best bet is, if you're using like the 3-minute, is to wait for that candle to close. So this candle closes, and then on the next candle, you do your very best to get in as close to this level as possible, right? So that would have been this wick down. So you just, if you're only using the indicator, if you're not actually doing the 4-step process and you're only doing the indicator, that's your best bet. So just do your best to wait, and then on the next candle, do your best to get as close to that wick low as possible. So That's it. That's as simple as I can make it. That's the best way that I can describe it to you guys. Um, I'll go over it again whenever you guys need me to. If you guys ever have any questions or anything, just reach out to me and ask. I'm gonna read. I have to leave in like 3 minutes, but I'm gonna answer these really quick, and then we're gonna head out. And yeah, we'll try to use this moving forward. You guys let me know what you think. Wardrobe says no, no, not exactly wardrobe. So let me. I don't know if I'll be able to find an example quick enough. Go to like. Okay, here's a good example. At my indicator isn't. It's not exact, right? Um, yeah, no, I'll get you tuckered out. Don't worry. Um, all right, so wardrobe. So you see it flipped from green to red right here, right? This next candle was red, right? But the next candle was green, right? So it doesn't have to be like red, 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 right? You're just looking for you're looking for it to remain underneath the EMA cloud. Now, the candle after the flip does need to match the momentum that you're seeing. So like green to red, you want this candle to stay red because you want it to close underneath that EMA cloud. But the next candle doesn't matter, right? It can be green, it can push up higher, it can push lower, anything like that. So tuckered out. So all you're going to do if you are using Top Step is you're going to use the EMA crossover of the 5 and the 13. That's it. Yeah, see, Clarkson's got you. If you go to the EMA crossover indicator, then, yep, yep. 5 and 13, Clarkson, not 15. Yeah, there you go. Boom. Yep, so that's it. That is as simple as I can make it. It is a highly successful strategy, but you have to kind of add a couple little flavors in there with it. You can't just run it just how it is. So that's yeah, that's where we're at, guys. And if you have any questions, again, anything, I'm gonna post this. It's 37 minutes long. I didn't expect us to be talking this long, but you guys know me. Once I get talking, it's hard to get me to shut up. So with that, thank you guys for being here today. This is the first iteration of my education courses. I think Zinc has the next one probably towards the end of the month. Don't quote me on that. But that is kind of what we're doing. We're gonna try to push out about 2 a month from all the traders here in Oasis. So anyway, guys, I am stopping the recording, and I will see you guys tomorrow morning.